You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investor and developer Ryan Gibson. Now, Ryan's the Chief Investment Officer and co-founder of Spartan Investment Group. At Spartan, Ryan is responsible for investor relations and capital raises for projects. To date, Ryan has raised over $14 million for various investments, including self-storage facilities, RV parks, and boat and RV storage. Ryan graduated from Mercyhurst University with a bachelor's degree in business with concentrations in marketing, management, and advertising. Now, Ryan is also an airline pilot and enjoys spending time with his wife and daughter in Seattle, Washington. And now, guys, I'm super excited to get onto the show with Ryan. But before we do, I just have a few quick housekeeping items I'd like to run through. Like I do every week, I like to share one of my personal bests and professional bests from the prior week. Now, as you're listening to this, prep has begun for our annual 3-day, 280-mile charity bike ride from Fort Myers Beach to sunny Key West. Now, this is going to be our 9th year of doing the ride. And to date, we have raised more than $300,000 for various charities that we support here locally in the Tampa Bay area, and have also provided holiday meals and gifts to more than 50,000 deserving families. Now, a little history of this ride I'll share with you very quickly. About 10 years ago, I thought it was a great idea to jump on my bicycle and ride from Florida to Washington, D.C. Okay, I had just started cycling. I wasn't in the best of shape. However, I love a big challenge when it's put in front of me, and that challenge was essentially riding in 11 days nearly 1,154 miles by myself. Really not much training under my belt. I basically had trained for 6 weeks to do this event, had never ridden more than, say, 50 miles on my bike at one given time, and ultimately took on this challenge and conquered it. 11 days, 1,154 miles. I started in St. Augustine, Florida, and rode my bike to Washington, D.C. And so during this ride, what ultimately came about is that I had a massive following on social media, on Facebook. I was really documenting the ride along the way and had just a slew, hundreds of people, thousands of people that were kind of cheering me on and just following my journey all along the way. And ultimately what happened at the very end, I felt very satisfied and rewarded that I made it through this journey. However, I had this massive audience that I felt I never capitalized on. And I feel like I could have done, I feel like I could have actually made a larger impact, not just for myself, but for many others out there with this audience behind me. I probably could have raised a lot of money for charities. And so, I decided after I was done with that event that I would put together a more local, but still fairly aggressive and intense local charity ride. And so that's where this ride was born. We start in Fort Myers Beach and we ride over a period of 3 days, 280 miles, all the way down to the southernmost point in Key West. Again, this will be our 9th year, and we've got people from all over the country that come and do it each and every year. So we're literally prepping for that right now. Probably as you're listening to this, we'll be riding through, across the Everglades, where all the alligators and snakes are hanging out, and we'll be on our way down to sunny Key West. So if you'd like to check that out at some point in time, you can go to our website, 72hourstokeywest.com. And if you'd actually like to donate to our cause, you can do that right there. And we'd love to, you'd love it if you could support our local charities here. And again, we make a massive impact on local families in the Tampa Bay area due to this ride. Now, as far as the one professional best, had a great meeting last week with the association leaders for one of our Buffalo, New York mobile home communities. Now, this is actually the first time that we had the opportunity to meet in person, and I felt that we were able to discuss and resolve a number of lingering issues during our short time together. So I flew up to Buffalo literally on Thursday, flew back on Friday, had the opportunity to meet for lunch on Friday afternoon with the association leaders there, and really look forward to working together with the association to ensure that our residents are being served to the highest standards. That's what it's all about, providing clean, safe, high-quality housing for our various residents that live within our communities, okay? So moving on here, guys, if you love what we're doing here at the Real Estate Investing for Cash Flow podcast, please take a moment to subscribe to the show and also leave a review and rating on iTunes if you haven't done so already. Like I do every week, I like to go ahead and read one of the reviews that were recently left. This one is from Alex Olmo. And Alex says, I am obsessed with this podcast. Kevin always asks the right questions of his super experienced guest. You're going to learn so much about multifamily investing. Kevin goes into detail about actual deals with the guest. He explains methods, terminology, and analysis. So, Alex, thank you so much for leaving that review. Moving on here, guys, I want to remind you very quickly of the free 30-minute phone call that I offer each and every week. You can go to my website, kevinbupp.com, to sign up for that call together. One disclaimer, though, when you're scheduling that appointment, please include some detailed notes of exactly what you'd like to discuss during our time together. Just so you know, there's no ulterior motive here. I won't try to pitch any kind of coaching program. This is really just a way for me to connect and give back. And so we can talk about anything your heart desires regarding real estate investing, okay? But make sure that you put some details when you're scheduling that call of exactly what you'd like to talk about so we can most efficiently spend our 30 minutes together, okay? Now, guys, without further ado, let's get on to the part of the show that you've been waiting for, which is our interview with Ryan Gibson. So here we go. Alrighty, guys, it is my honor to introduce my guest for today's show, co-founder and chief investment officer of Spartan Investment Group, Ryan Gibson. Ryan, how you doing today, my friend?
Good. How you doing, Kevin? Thanks for having me.
Awesome, man. Yeah, absolutely. Thanks for joining us here. And if you guys aren't aware, we've actually had Ryan's business partner, Scott, on the show. I think definitely one time, possibly even two times. I can't recall. I have to go back and take a look. But in any event, Scott's a good friend of mine. I've known him now for a couple of years. And wanted to bring Ryan on the show. Ryan is again, as I'd mentioned, the chief investment officer. He's in charge of a lot of things, but one of the primary things is investor communications and raising capital for their different projects. And so that's one of the big topics that we're going to go into detail here today as we have this interview. But first and foremost, Ryan, for those folks that aren't familiar with you, your background, the company, what have you, maybe take a few minutes and just tell us a little bit more about yourself and how you got into real estate and ultimately what it is you do. You give us the overview of what you do there at Spartan.
Yeah, sure. Thanks, Kevin. So primarily we started with residential development, flipping houses, building new houses, doing condo conversions. And we ultimately ended up on storage. So we're self-storage investors, and we find self-storage opportunities that have value-add component to them, or we build from the ground up. And I think that's actually, I listened to that podcast that my business partner Scott was on previously, and he talked all about self-storage development. And so I'm kind of on the capital raising side of things. My background as an airline pilot and flight manager brings me back to flying and doing checklists and being kind of a procedures-driven person. Scott and I met each other in DC and really took a liking to one another, and our backgrounds, and his background in the military, my background in aviation, we became good friends actually by virtue of being neighbors, which is kind of funny. And we flipped a house in between us and just started flipping houses and kind of starting the partnership that way. But since then, we've really just kind of scaled the company, and we've done that through syndication and through raising money. And that's really helped us, kind of get to where we are today, our investors. And we basically go out and raise money under Regulation D, as everybody's familiar with, probably listening to the show, just like you do as well, Kevin. And we actually do the exemption 506B. So we raise money from investors that we know and have a pre-existing relationship and are considered sophisticated. So that's kind of my role. So, sort of how we got into it was, residential, but then now we raise capital for primarily storage projects. We've done an RV park, as you know, but we just do primarily self-storage. And my role in the company is to find investors, communicate with them, and give them a good experience throughout the entire investment.
Okay, fantastic. I appreciate that background. And real quick, before we go into the capital raising side, because I've got a lot of different questions for you that I think as we go through will be very helpful for the listeners here today. Let's talk about self-storage. I know that we probably covered this when we had Scott on the show, but I'd love to hear it from your perspective. What ultimately drew you guys to the self-storage asset class? I mean, there's many other things you could invest in. I know, again, that you guys also do own an RV park. That's somewhat of an anomaly. Your core focus is predominantly in self-storage. So what drew you guys there?
Yeah, so we looked in about 2016, we decided that residential was fun, but we kind of thought it was getting close to its peak. And it was as you know, Kevin, with mobile homes, I mean, it's not a very tax advantaged asset class. So, if you flip a house, you're paying the highest taxes. You're doing a lot of work. You're doing mechanical, plumbing, electrical, chasing contractors around. And, the deals they're very quick and you have to have a lot of deal flow. We looked for something that just helped us scale our business more. And we looked at all the asset classes, mobile home, office retail. We looked at self-storage, we looked at residential, we looked at multifamily, and we ultimately decided on three things that drove us to storage. Easy to maintain, easy to operate, and easy to evict. So those are the kind of the things. And the other part of it was we looked at how asset classes performed during the last recession and over the last 20 years during downturns. And self-storage, along with mobile homes, was actually one of the top performers. So that, as we saw the recession coming, we saw an opportunity to sort of get into storage, kind of well in advance of that. Now we're in late 2019 and the economy seems to have no signs of slowing down.
Still running. Yeah.
But, that's kind of where we saw it going. And, so we took a few months, 90 days, and we just learned everything we could about storage. We traveled the country, went to conferences. We actually invested with somebody else's storage project to learn about self-storage and how to put together kind of a syndication, and, kind of learned how to do projects that way. So
got it. Fair enough. I know that you guys are very methodical with your approach. Just after knowing Scott now for a few different years, you guys are very systems oriented and driven individuals, and are very calculated as well with your decisions. And so we could probably have an entire show on really, it's a deep dive as far as like why self-storage. But we're not gonna cover that here today. Maybe another time. What I'd really love to chat with you about, Ryan, is raising capital. We get a lot of listeners that tune into the show that are fairly new. They're just getting started. Maybe they flipped a few homes and they're looking to do bigger and better things. And that to me means commercial real estate. And that could come in a variety of different flavors. Just as you had mentioned, self-storage, multifamily, retail, office, industrial, the list goes on and on. But I think, the sexy allure of looking at bigger projects, that's one thing, right? They're like, yes, bigger is better. I can get the scale faster. I can reach my end goal, whatever that might be, faster than just flipping individual homes. However, I think the mental barrier that a lot of folks run into is the capital raising side. This is assuming that they're not super liquid themselves. They can't just go out and stroke a check for a $20 million property or multiple, $1 million properties, which the average person typically can. And so I really want to cover the details of exactly what you guys did, Spartan Investment Group, because you guys had a first project. We all have first projects that we go in a capital raise for, that we enter into this space, and we look to reach out to others that are high net worth individuals or folks that have capital that are looking to invest in projects like we have and invest alongside us. And so talk to me, I guess we'll start off with this. Give me from your perspective, what you feel are some of the keys to Spartan's success overall, as you guys have raised now over the last couple of years. I think probably $15+ million for various different projects. I mean, just from a higher level point of view, what are some of the keys to your overall success? Because again, you'd mentioned that you started a few years back in single family. I mean, you weren't raising $10 million for single family property, right? So at some point in time, you had a big capital raise on your hand, and it was your first time, right? You're kind of emerging capital raisers, right? And so how did that look, and what do you attribute to your overall success?
Taking care of the people that invest with you, I think is the number one thing. I mean, everybody wants to know how they can get more investors and attract people to their list, but taking care of the people who actually invest with you and put their trust in you is the most important thing I think you can do. And you can even consider that marketing. That is your marketing. It's taking care of the people that go in early with you, that invest in your first few projects, that, will serve as your referrals and your testimonials later on, and help you build your track record. So if you're going out and doing a small raise, our first raise was $450,000, and I stressed, Scott and I, oh my God, are we going to be able to get this together? And that was back in 2015. And we just literally added a zero to that. We just finished up a $4.5 million raise. And so, you might think, oh my God, how can I get there? Or what can I do to get to that type of relationship? And we don't have a massive list of investors. We only have about 1,200 people in our network. So we were kind of doing the calculation that our average investment's about 150 across, that could be across multiple investment opportunities, but really just focusing on putting together a plan to take care of the people who decide to invest. And what I mean by that is communicating to them frequently. So we do a monthly communication, and we also do a quarterly financial communication, and we also do a quarterly teleconference. So there's nothing worse, in the syndication world. Somebody is deciding to invest $50,000, $100,000 with you, and as you know, they're putting that money with you, and it's not liquid. So they're along for the ride. So if they don't have communication, they really don't have a lot of insight into what is going on with your project. So we like to do monthly communications by the 15th, and we like to do quarterly financial communications. And in those financial communications, we actually do instead of just sending the P&L or a balance sheet, which is helpful, we like to send a revenue, expense, NOI, and distribution chart that shows what targets we should have hit and where we actually hit. So in about 10 seconds, an investor can look at our charts and they can see how we're doing without even reading any text. They can say, these guys are 37% higher than they thought they were going to be, or they were on target for revenue. Their expenses are a little bit lower, so that's what's driving the higher distribution amount. And of course, we provide some contextual, context to what those charts say. But have a communication plan. I think taking care of your current people is so important. I do probably 15 investor consults a week at a minimum, and the question that I get the most is, who invests in your how do your investors reinvest? Is probably one of the top questions I get. How many of your investors are investors that have reinvested in your projects? So if your answer is, if your answer is truthfully, most of them or large majority of them, that you're taking care of your people. And that's very telling. Another question that I get from investors from time to time is they ask for referrals. And, I usually provide referrals at the point which we have an offering ready to go and they're ready to pull the trigger. It's kind of the last minute thing, right? Yeah, sure, you can call these people. You're about to invest just to cross check. But if is it one referral, and is it who is the referral, right? So referrals are always nobody's ever going to give you a bad referral, but if there's a way to do some digging on your company and there's good news about how you've done on the internet, Google reviews or Facebook ads, where you're very present on the internet with a reputation to uphold, I think that's a very good indicator of that. So
yeah, no, what I think a lot of folks fail to realize, and what I'm kind of trying to extract from everything you just gave there, there's a lot of things you just shared there, but one of the important things I think that we can somewhat summarize is it's much easier to go deep than it is to go wide. And what that means is have that concentrated base of investors that you can start with as your foundation, that you've built trust with. They've invested in your first project. And I can promise you what will happen is if you treat them well, just like Ryan said, many different ways, communicate them with them on a regular basis, be transparent with them, be honest with them, be available for them, is that they're going to tell their friends, right? They're going to tell their friends. They're going to be playing golf. They're going to be at the country club. They're going to be wherever. And they're going to talk about this awesome opportunity, this awesome investment they're involved in. And that's going deep. That's actually using that initial foundation and using the references or referrals from them to go deep into their network versus going very wide and having to find new investors each and every time. It's good to keep going wide, but focus on going deep and taking care of who you already have there at present. What I'd love to ask of you, Ryan, is, it's ongoing communication is it's incredibly easy when everything's going great, right? And so talk to me. And here's the thing, guys. This isn't me putting Ryan on the spot here.
Absolutely.
Nothing ever goes exactly as planned. Sometimes it goes a lot better. Sometimes it doesn't go as planned, right? And so
correct.
The whole goal here is to be transparent, honest, and have that and remain to have that open line of communication. So does it look exactly the same for you guys when things might not go as planned? And how do you handle the situations? Because, what tends to happen is if you're sharing everything, you might get inundated with investors reaching out to you, so on and so forth, with concerns. So how do you guys address that accordingly when things might not go as planned?
You let people speak. Sometimes when we have a quarterly conference call with our investors, We had one project in our history that, like you said, some go better, some go worse, some go about the same, right? We had one project that wasn't quite selling as it was in the residential space. It wasn't quite selling as fast as we would have wanted it to, and it was stretching the timeline of the project. And so on our quarterly conference call, which we always have no matter how well the investment's going, we unmute the microphone. We let the investors talk, and we say, hey, here's the financials. Here's where we're at. We don't just come out there and say, hey, we need your help. We present everything that we're doing, and then we open it up and say, is there any comments, concerns, suggestions from the group? And it's amazing what happens when you're open to that feedback and you allow your investors to share their concerns among the group. And allowing people to kind of air their frustrations and their concerns early on and up front is super important. Like they say all the time, good news or bad news doesn't get better with age. So the sooner you can kind of get that out there that, hey, we're doing everything we can on our side and we're not getting the result that we want. Do you guys have any suggestions? That's kind of a last course of action. But yeah, I also think it's really important that when you communicate to people, you don't create more questions than you answer. So when you're giving a communication monthly or quarterly, and the deal isn't going quite as well as you expected it to, I like to say that before I sit down and write an update, I think about, have I done everything I've done in this investment to make it where it could be today? Has my team done everything that they can? Have I done everything that I can? And I think it's a motivator. When you're on the hook to communicate every month, I think it's an internal motivator a little bit to make sure that, hey, what else could I be doing before I send this email? When I write my investors this month, what am I going to be accountable to? And I think the accountability part is really important. And also, we had a problem on a delay of a project one time with the U.S. Army Corps of Engineers, and we communicated to our investors very well so that when the problem was ongoing, everybody knew what the problem was, and they knew it wasn't us, and that we were doing everything that we could in regards to working with the jurisdictions to get the project approved. So they felt like they were on our team versus going completely silent when something's going bad. Nobody has any idea what's going on, and then they start coming up with all these ideas in their head that it's you and you're the problem, and they start coming after you. And if they know the problem clearly and concisely, and they know what your solution is or what you're planning to do about it, it brings them onto your team, and I think that just goes a long way in the cohesiveness of a good experience on investment, even in a bad time.
Absolutely. No, I love every bit of that. I know you guys have multiple different projects that you do, or that you've done in the past. And typically, unlike us, like we normally do a fund structure. And so we have multiple, acquisitions underneath one capital raise event, whereas you guys typically do individual deal specific capital raises. And so my question would be, as far as like the ongoing communication, you guys do monthly, you do quarterly, you have these open forum calls. Do you do that same thing for each individual property, or do you kind of put it all together? Because there's a scalable aspect there to where if you got like 20 different projects and you're doing individual monthly calls for that, for one project at a time, same thing quarterly, it gets a little overwhelming. So how do you guys handle that?
It does. So we do have Lauren Burchell as our marketing associate, and she is a big support for me in this. So I have a whole process with deadlines, and the process goes in summary like this. If we could share a screen, I'd be happy to share our process. Basically, by the 15th of the month, the communication went out. So a new template is created in MailChimp with set things that we always update. So it's not reinventing the wheel every time. It's the same things that we're updating on. Operations with some occupancy and some marketing, and capital improvements that are happening to the project. So by the 6th of the following month, Lauren goes out and I'm doing, I've just kind of transitioned out of this. She goes to the operations manager and our construction project manager and gets an update from them on a project by project basis. It's nothing super long. she brings that into MailChimp, and she also tracks pictures. So when these individuals are on the road, which you do a great job of, by the way, I'm like extremely envious of your drone and your Facebook Live on that thing. That thing is really cool. But she keeps track of when these people are at the properties so that she can collect pictures, and then she stashes them in the MailChimp templates so that when we actually release the update by the 15th, it's got real stuff in there, project by project. So it's just kind of having a system to stay organized with the information, so it's not so overwhelming when it's, oh my God, it's the 14th, I've got to get my communications all together and get them proofread and all that. So there's a huge process in that. And then once it's kind of all together and organized, she sends a test to me. And I can edit and review, and then once I kind of approve it, it's scheduled to go out on the 15th.
Got it. So just absolute clarity here. You guys do individual communication for each project. Okay, got it. Wow, that's a beat.
It's a bit of work, but when Scott and I got into this business, I think the cool thing about real estate is that you can own a specific project and get your hands on it, touch it, feel it. It's a real hard asset, right? That's why we love this. Mm-hmm. I think opening it up to a passive investor, I think the neatest thing about that is you also own, as a passive investor, part of this project and this deal. And knowing what's happening with your investment, I think is great. And I think, the difference between stock investing and real estate investing is that hands-on. But the difference between real estate investing and stock investing is I can log into my Fidelity account and I can see exactly what's going on with my investments, and I can push a button if I don't like it, right? And they're gone. In real estate, you can't really do that. So I think it's important to give your investors a front row seat to what your investment is doing, because I think that's part of the fun experience about being a passive real estate investor. I think that's kind of, the real. So I take a lot of passion in, communicating that out. The quarterly updates are just the same as the monthly updates, except they have that financial component, which is just an extra step in getting the financial reporting from our director of finance, Ben, as you know well, and getting those charts, inserted. But again, it's all templated, so it's the same format every time, so the investor can kind of know what to expect in the updates.
Got it. We're going to skip around here a little bit. Just had a question come to mind that I think it's worthy of asking is, you mentioned that you do 506B, Reg D 506B offerings. What's the reason or the decision behind the 506B versus a 506C? And maybe, you can share kind of the specifics behind each one for those that might not know the difference of the two.
So 506B, you don't have to be accredited. Mm-hmm. You have to be sophisticated with a pre-existing relationship. Mm-hmm. And, we just got to start with, talking about going deep with people. We would rather know everybody that invests. I'd rather have a pre-existing relationship with them. I'd rather kind of understand that they're a good investor, that, they're going to be along for the ride and they understand the risk in taking a loss in an investment. So I have a call with all of our investors before they're presented any projects. And we have them fill out an 11-question investor qualification form. That's kind of our two things. If somebody comes off of we meet them at a meetup or a podcast or whatever, we have to have those two things done. And I think it's part of better customer service just to ask an investor, what are you looking for? What's important to you? And get those need, wants, and objectives out of the investor and record those so that what that investor's preferences are. I think that makes an investor have a better experience. Naturally, that's 506B. You have to have that relationship. They have to have that level of sophistication. It also gives you the advantage of not having to do a accredited investor third-party verification. Not that that's the end of the world. I mean, it's getting easier and easier as time goes on and more people do this. And it also allows non-accredited investors to invest. Mm-hmm. And just because you're not accredited, it doesn't mean you're not sophisticated. I know plenty of accredited investors that have no idea what they're about to do, right? And I know some very, some non-accredited investors that are very sophisticated. So I think having those conversations is where you really understand who your investor is, because whether they're accredited or not accredited, in my opinion, doesn't really justify if they're going to be a pain or not, right? And what I mean by a pain is, really understand what you're about to do. You're about to invest $50K, not liquid, in a deal that might take as long as 7 years to get back, right? So I really want to kind of understand those relationships. So I love 506B. I think it's a good, and as a company, I think we've really embraced it in our values. 506C, it's credited only, but it allows you to advertise, so you can blast your deal far and wide to the world, and people can invest in your deal that you don't necessarily know. That's just kind of the route we've chosen to go. I think 506B comes with a lot more processes than 506C, because you've got to have a CRM system and you've got to annotate how you've established that relationship with them, or how that person was attracted to your business. And that does take a bit of effort, but I think it's worth it in the long run.
Got it. Yeah, no, I agree. And we do 506C just really for the general solicitation, the ability to actually put it out there. Lots of our investors are pre-existing relationships already. However, we are restricted to just accredited investors only. But sure. To each his own, right? There's not a right or wrong way, guys. It's really whatever's the best fit for you and your business. Really, you make that decision yourself.
Absolutely. Yeah.
I'd love to talk about the wonderful world of Facebook and Instagram and LinkedIn and how that plays into your business and overall capital raising strategy. Social media in general, how does that work in your business, and how do you guys leverage it?
So first of all, we have our attorney review anything that we put out on social media that pertains to talking about a deal that we've done or that we've got under contract or things like that. So I think it's important if you're going to be in the capital raising space that you understand what is allowed on social media and not. Mauricio Rule did a great video on his YouTube channel explaining what you can do and what you can't do. And there's a lot of great social media podcasts out there, kind of how to put it out there. So caution with that. So we try to put things on social media that attract people to our business generically. So hey, we're having a webinar on the self-storage investing asset class, or we're having a webinar on how to do due diligence on an investment, or we're having a webinar on what cost segregation and bonus depreciation is, right? So those are things that we put on social media that aren't deal specific. They're not talking about any particular project. They're not talking about what amazing returns we have or amazing performance or anything like that. They're generic things that can attract people to our business and generally position ourselves as self-storage and real estate experts. So that's kind of what we do in the social media world. After a deal has closed, we run that by our syndication attorney, our SEC attorney that, looks at our videos that we post and looks for things like, oh, this is going to be a X% return over 5 years. And this is going to, we're going to refinance out everybody's money. It's going to be amazing. And we really get it scrubbed down to just talking about, we bought a deal in Fort Worth, Texas, and it's a self-storage, and we're really happy. Thank you for everybody that joined us on the investment, and look forward to this project being awesome, right? So, that's kind of a very generic thing that we do, and that's what we leverage. And we're using, before it was like, let's just do Facebook, let's just do LinkedIn, but now you've got to be everywhere. Now I hear that.
What's that mean for you? Are you guys on Instagram, or I don't know? I guess is that and then YouTube, obviously, but then you got some of the other ones as well. I don't know if you guys leverage anything outside of those four.
Yeah, we use Instagram, social media, LinkedIn, YouTube, and I feel like I'm forgetting one. But
Facebook, obviously, so that's 4, and then it really goes into like Snapchat and we
don't really do that.
TikTok, I don't even know what that is anymore. I'm showing my age now that I have no idea really how to use those, and I don't have them on my phone.
Yeah. Yeah, we use a program called Hootsuite. I don't know if you've used something like that. Yeah, so we can schedule our Facebook postings, and we have a social media calendar. So we actually have a theme to all of our posts. So on Mondays, we post, a motivating thing. On Tuesday, we post something about a city that we're investing in, maybe a fun fact. On Wednesdays, we'll post, maybe we were featured on a podcast, or we had an engagement somewhere. We'll talk about that. And, just stuff like that. So we do it across all platforms. So Instagram, Facebook, LinkedIn. It's quite an effort to have a social media platform that is consistent in quality, So as you know really well, you do
it's
a good
legitimate
job.
Full-time job. It really is. It really is. That's you need someone on your team. I mean, really.
Yep.
Everyone's only got so much bandwidth as you start to grow your company. If you're doing deals, at some point in time, normally sooner than later, you're going to run out of time in the day, and you're going to find that your time you never want to abandon those things that are bringing value to your business and bring value to others as well. And one of those, if you're making social media posts on a regular basis and you're getting traction there, you surely don't want to stop that. However, you continue to build relationships, to raise capital, finding deals is equally as important. So at some point, you got to start delegating these things off to others that, hopefully are better than you might be at it, right? And
yes.
the social media thing for us, that's something that we've delegated out of our business. I'm still involved in the post per se, but I'm not the one that does the editing behind the scenes. I don't create the graphics or any of that kind of stuff. I just, number one, I don't have the skill set to do that. Number two, I don't really have an interest in doing that. I'd rather let professionals that's what they focus on, let them handle it, and just let us create the content, or let me create the content. So, I'd love to, I want to ask this question of you, and it's this question, it gets floated around so often. It's kind of like, what comes first, the deal or the money? And, and everyone, it's like a 50-50 chance of like what the answer would be. But anyway, I'd love to hear your side of it and why.
So I think your team and your experience comes first. I know that doesn't answer your question directly, but
don't skirt the question.
I mean, obviously, so I have a good thought on this, and I will conclude with an answer, I think. I think the deal is important. Let's just answer the question.
Mm-hmm.
The deal is probably what comes first. The money, I always feel like whenever we have a solicitation, even though it's 506B and we can't add on investors kind of once the deal is out, that we haven't had a relationship previously to, the deal goes out and it's like our network sees it, and then they go, "This is really cool. My sister would love this," or my friend's neighbor, or the guy I work with. And I think it really creates your network when you put a deal out, because people say, wow, these guys are putting out like really high quality investments that I want to invest in. And I want other people to be part of this too, that I have a good relationship with. So I think the deal does drive a lot of cash that comes in to invest in projects. Obviously, if you never have a deal and you never have anything out there, and you just have a bunch of people that hypothetically want to invest in your project, it's really just that. It's just hypothetical. It's, they say they're going to invest, but you really learn who pulls the trigger on investments when you actually have a deal in front of them, right? I mean, that's kind of an interesting fact, actually. We looked at our investor list, I think about a year ago, and we're just about to do a data poll to update how things have changed. And when we pulled our investor list, just looking at the people on our list, 33% of them were personal relationships, people we knew from the past. 30% of them or so were meet at a conference or, a meetup, some type of real estate outing. A very small percentage of them were referrals, maybe like 8, maybe 7%. And then the rest were just kind of everything else, like, maybe a webinar, small percentage, maybe social media, met through a deal, things like that. But when we looked at the details of who actually pulls the trigger, it was 180 degrees from who is actually on our list. So personal relationships made up nearly 70% of who pulls the trigger. Personal relationships. Frankly, people that trust you.
Yep.
And then the next highest category was referrals, nearly 20%. So when you look at who's, when you're attracting investors to your deal, you may meet all these people at the conference that want to invest in your project. But when you look at actually who pulls the trigger, you'll find out who those people are. It's important to track that so that you know where your weaknesses are and you know where your strengths are in your capital raising arena, so to speak. So I think it's all about the deal. The deal needs to be there. Most importantly, the team needs to be behind it to operate it, and then the cash comes. There's a lot of money on the sidelines. I think it's 19 trillion. So
yeah, no, it's a lot. So my answer to that question, it's kind of an unfair answer because I think it's a little bit of both simultaneously. Like you should be out there looking for the opportunity, whatever that might be, and also building those relationships. So like, and it's kind of a cheating question, or at least an answer to it. So
if you haven't built those relationships 60 days at least before the deal comes, you're not going to have them Rolodex, right? I mean, or you have to stick to 506C, hope to God you can attract enough people through an advertisement. If it's your first deal, good luck with that. Raising money from people on the internet is really hard in the beginning without any experience or track record, really difficult.
Absolutely. Absolutely. Well, Ryan, now I'd like to enter into what we like to call the lightning round. And I didn't tell you this was coming, so I'm going to catch you off guard here, but I promise you they're fairly easy questions. So basically 6 very short, concise questions looking for 6 very short, concise answers. So first one, biggest fear, what is it?
Missing something in due diligence.
Okay. One biggest regret.
This year, not going to the Bigger Pockets conference.
Okay.
It's right on the top of my head, so I'm just saying it.
Yeah, no, fantastic. Most influential business book.
Cash Flow Quadrant. Love that book.
Okay. Outside the daily work grind, what do you do to decompress?
I love to hike with my family.
Okay. What's the one thing that you can't live without?
I can't live without coffee.
Got it. Lastly, what would your backup plan be if you decided one day that you no longer wanted to do what you're doing today? And I know you started your life as an airline pilot, so maybe outside of it being an airline pilot and a real estate investor, what would that backup plan be if you didn't do either one of those two?
That's a great question. Let's see.
And it more revolves around, like, if you lost the passion for those two things, like what's the other thing that you're just absolutely passionate about, whether you make money or not? I think that's.
Oh, shoot. I know this. I don't know what you're talking. I know exactly what that would be. I would have my own supercar rental business.
There we go. I love that. That's a good one. That's a unique one.
Yeah.
So you're into supercars, and I guess.
Well, I drive a Mazda CX-5, and I only actually have one car between me and my wife. So I am the most boring car guy, but I love cars, and I love fast cars. I love renting them and then giving them back to somebody to deal with. So
absolutely. Well, Ryan, you shared lots of great information here today, lots of golden nuggets. But if you had just one last golden nugget left in your pocket that may inspire or motivate our listeners here today, what would that one last golden nugget be?
You can sit there and run the numbers and do the analysis and look for deals, but if you're really trying to raise capital, it's all about getting out in the world and building relationships and getting in front of people. Mm-hmm. The personal relationship, regardless of how much social media and online this and online that, the face-to-face and personal relationships that you can establish have not gone away in the slightest.
Yeah, no, absolutely. And I think one way to actually kind of leverage social media to do that is whenever you guys are going to conferences, wherever they might be, if you're going to meetup groups, make sure that you post about it, that it's actually happening, not while you're there, yes, but before it's actually occurring. Like maybe it's a couple days in advance or a couple weeks in advance. Let people know where you're going to be and that you'd love to meet in person. So be sure to ask them to come and introduce themselves if they follow you on social media, if they've heard of you. It's a perfect way to kind of line up those interests and those personal face-to-face meetings because it's incredibly important, right? I mean, people can follow you on social media forever, but it's really hard to understand an individual and to get that full trust realm unless you actually get them in person. At least that's how I feel, right? I mean, I like a lot of people, but it's hard to actually fall into the category of like, I trust and I really love what this person's doing to actually meet them in person and share, a handshake, maybe a drink, break some bread together, what have you. At least that's me personally. I don't know how you feel about that, but it sounds like we're kind of on the same wavelength here. Oh,
absolutely. And I'd even add on to that and say that if you're at a conference, you're there to learn, but you're there to network. And
absolutely.
And that's what it's all about. It's the relationships that you build in the after hours that really is what makes the difference in your career as a real estate professional. So absolutely.
Ryan, how can we reach you? What's the best place to find you?
Yes, sure. So our website is Spartan, Spartan -investors.com. And if you want to email me, it's the same as the website, just Ryan. So RYAN @Spartan-investors.com.
Well, fantastic. Ryan, is there anything else that we might have missed today that you feel is incredibly relevant for our listeners to know about capital raising? I feel like we covered a lot of ground, but is there anything else that's missing there?
I'll close with one thing, and I'll say that I did recently join my city club. So there's in every town that there's an athletic club or, some kind of gathering of higher net worth individuals. If you go there, you can really have a lot of spin-offs and meet a lot of really neat people and do things that you enjoy while raising capital. I think that's a great takeaway that I don't hear a lot of people doing. Maybe they are doing it. I just don't, not aware of it, but I think that's a really neat thing that you can do.
No, I think that's a great idea. And what I envision is Ryan, he's pumping iron, right? He's doing like big curls with like 50 pounders as he's talking about self-storage to the guy next to him. I love it. Ryan,
25 pounders. 25 pounders.
Yeah, right. Ryan, this has been a lot of fun, man. Really appreciate you coming to the show. It's been a pleasure having you here. Lots of great information that you shared. And folks, again, his website, Spartan-investors.com. Go find out what they got going on. Lots of projects. They've always got something in the work, always got a lot of irons in the fire. It's a great group of people there. Go check them out. And Ryan, that's all we have, my friend. So thanks for joining us here. And guys, thank you for tuning in for this week's show. And until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.